So you're a tax professional, you have some familiarity with the Augusta Rule, but we're here to dig a little bit deeper. Let's tell you where to not learn about it. TikTok. If you want to learn what not to do and what the rule is not and cannot be, go to TikTok. It'll also be highly amusing, frustrating. If you want to learn what the rule actually is, it's really pretty simple. Go to code section 280 Cap A G2, and it's going to tell you that a taxpayer can rent out a personal residence for up to 14 days per year tax-free. It's nicknamed the Augusta Rule because what made it popular, what got people listening to it and hearing about it, was the press coverage of people on the Augusta golf course, when the tournament would come in, renting out their homes for $10,000, $20,000 per day, making sure they rented the homes for only 14 days or less, so reaping a windfall and paying absolutely no taxes on it. We put a little bit of a twist on it. A lot of people don't want to let strangers into their homes, so they're not willing to rent it out to whomever shows up. That could get entertaining or bad. They'd rather rent it to themselves. And done properly, it works. We start involving more code sections. Because a taxpayer is renting the property to their business, more complexity is involved. Strings are attached. We're going to walk through those strings one by one in great detail to show how this really is not a gray concept. Renting your personal residence to a business, the business gets a tax deduction, the taxpayer receives the money and pays no income tax on it. It's a little bit complicated. We'll walk you through it. We'll make it simpler. What's the problem? There's a checklist for the clients. A lot of clients just don't want to do it. You know how entrepreneurs can be. They want to do their thing. They view all of us tax professionals as backroom nuisances. We can simplify things. If you want a detailed discussion of the law and guaranteed results for your clients, sign up at theaugustarule.com.